right, guys, how are you doing? This is Jesse, your host with another episode of Bullish Banter. We'll be covering some of the questions we have received over time. Of course, my name is Jesse, and I'll be joined by
Rufus Kamau here.
Yeah. I hope your week is going well. We have had a number of episodes done on different topics, from inflation, investing during crisis, the dollar shortages, of course, and the banking crisis. How do you feel about what we have educated Kenyans, Rufus?
I feel we are making much progress, especially based on the responses we are getting from our listeners.
Yes.
Also, a lot more people are developing interest in the Bullish Banter podcast.
Okay.
So I think it's a big plus for us and for our audience.
Yeah, I think one of the most striking comment I've had is that we do macro stuff, and I think in trading, macro will refer to the fundamentals, the news, the what is happening and how can it affect price.
Yes.
And then the micro is the technicals, the pips, the risk management, the candlestick analysis, the lot you put by every trade,
I think the podcast is a complement of our other work.
Yes.
So, for instance, when it comes to technical analysis, we are doing this daily on YouTube.
Yeah.
So, macro, I think, kind of fits for the podcast.
Yeah. I want to give a shout out to one special loyal listener, Malombe. I hope when you listen to this, you will continue and you will share with us your, opinions, questions, and if possible, sometimes we can meet up and also you can ask it live. He has some question which I know a lot of new traders and even some traders who are start getting in. Like we have just spoke about last week, inflation from the Eurozone. The other time we spoke about inflation from the US. He wants to understand, when investors get the CPI data, there are three main components.
Yes.
The month-on-month, year-on-year, and then core CPI.
Yes.
Maybe this time round we can elaborate on them further and how to go about it.
Yeah. So when we talk about inflation, we know that it's measured using the consumer price index, which is basically a basket of commodities that are consumed by the average household within an economy.
Yes.
So when you compare the price of that basket, let's say the components of the basket is, let's say, the price of basic healthcare, rent, transport, food, clothing, and beverages.
Yeah.
So when you compare the price of that basket this month with the price of that basket next month, then you get the month-over-month CPI.
Yes.
So in that case, you are seeing the change in prices between last month and this month.
Okay.
So if you do it annually, then you'll be comparing the price of that basket, say May last year versus May this year.
Yes.
So that gives you an annual change in price, while the other one gives you a monthly change in price.
Yes.
But then, if you look at core CPI, this is the price of the average goods and services consumed by the average household, but then without the two most volatile components, which is food and energy prices.
Okay.
So that gives you a more stable outlook of the change in prices, because food can be really volatile. At one point, food can really spike up or go down, and the same case applies to energy. Yeah.
Especially when, it is not the season perhaps of tomatoes, potatoes.
Yes.
So maybe the prices have gone up due to scarcity.
Yeah. We know that best in Kenya, where sometimes price ya nyanya inapanda, and if you're considering that in the basket, then it can cause a big shift in the price of the entire basket.
Now, a trader, let's say last week on Wednesday, I think it came out, when I say last week on Wednesday, I'm talking about the May of 10th.
Yes.
For context to the listeners. 4.9% the year on year, 0.4% month on month, and then 0.4%, which was slightly higher than the previous month, or expectations rather, of 0.3. So it basically maintained the same thing. And as we speak today, this would be around 17th of May.
Yes.
The CPI from Europe is come out the same, 7 and.
So what that meant for the US is that the basket of commodities between the month of March and April increased by 0.4%, which, if you are to project for a year, averages about 5% a year.
Okay.
But then if you look at the annual, it dropped from 5.0 to 4.9%. mainly because of the change in the base year or the base month. So if the base month is the same month last year, if we calculate this month and then look at next month, then we're also looking at the difference between May and let's say April last year. So if there was a big shift, then it is going to affect the overall number. So while on book, inflation in the US dropped from 5.0 to 4.9. Based on the change in last month, inflation is still very much prevalent.
This is a very interesting one because it covers what we just spoke about last week.
Yes.
My hesitancy from Shiro or Siro, I hope I pronounced that right. Shiro. Yeah, you know where I come from. She and SC. It's a very fine line.
Silingi.
Silingi, you know. Mercedes, not Mercedes. There are things which, anyway, jokes aside. My hesitancy with trading is that with the Kenya shilling being so low, it can really mess up your finances. I think that is very true.
Yes.
And I think that ties as well with the inflation. And then the second is the steep learning curve. And I think the highlight of our previous conversation was that the cost of you investing well is the education.
Yes.
And for me, I think that is the best price you can pay for anything.
Yes.
So she requests rather for a book. And perhaps what can you tell her?
A book about
trading, something like that. So that
So when it comes to trading, there's quite a lot to cover. There's no single book that covers trading, forex, commodities, and all that. So I would rather say look at the basics of investing. There's a lot of information online. The most important aspect of trading is risk management. So look at a book on risk management and on psychology. It's very important because your psychology works against you in trading. So I want to recommend one book when it comes to psychology of trading. And this is a book by Mark Douglas called Trading in the Zone. Yeah, nice one. And what about the comment on Kenya shilling being so low? How do you counter that? There's no way out. If your local currency where you are living and spending, the currency is losing value against the dollar. Then the only way out is to out earn the changes. So if the Kenya shilling is losing by average 10% in a year, then your income either increases by over 10% a year, or you out invest.
Underspend your income.
No, don't underspend
your expense.
I'm saying out invest. Like for any spare capacity you have, any spare cash you have, make sure wherever you're investing it, it's giving you a reward that is higher than the inflation rate.
I think another source of learning, you can visit any of the FX Space academies, spend every day maybe an hour or so. If not within your region, novice to pro covers that quite well. I think it's one of those simplistic way of you taking your time, learning, inquiring and consulting as much as you can.
So for our viewers, Novice to Pro is a 10-episode series that I've done on YouTube. It's available on the FX Pesa channel.
Another question from Rosaline Wanjiru. She says, more bank shakeups are loading. And previously, you just mentioned that there is a report that came out on today. That will be 17th of May, talking about 13 banks being at a stress level. And shakeups are loading. What can banks do to cushion themselves, perhaps have short-term resilience? Very interesting question.
It's a tough question. I'm sure it's a question that's happening across boardrooms in 13 banks in Kenya right now.
More like all the 46 boardrooms, because with the interbank or FX market opening, I think it's some time back to cushion the Kenya shilling. There is some liability well spread around.
So I think the number one thing they need to do is to, stop digging. Know that saying where if you find yourself in a hole, then you stop digging. So the way that the banks have been digging themselves into this kind of financial trouble is as highlighted by the CBK, giving excessive loans to individual borrowers, investing excessively in real estate, So it's more or less of a risk management issue.
Okay.
So one of the ways out seems to be hedging.
Okay.
There's a lot of risks that the banks are taking that can be easily hedged using other global financial markets.
Interesting. I think we also spoke some time back about strategies of trading, from long-term trading to swing trading, and all these require significant amount of capital investment. Yeah. Now, I'm sure a lot of traders and yourself have perhaps tried.
Yeah.
This is about funded account trading.
Yeah.
And basically it is whereby you apply for an account, you pay for, let's say, $100 depending on the account size.
Yes.
They give you $100K USD.
Yes.
You trade, but there are strict policies.
Yes.
To not only protect their funds, but also to keep you on top.
Yeah,
what is your view?
out.
Yeah. Okay. Or to kick you out.
Yes.
What is your view on it?
For prop firms, I would say if you want to manage a bigger amount of money,
yes,
and you don't have that money, then yes, they provide you with that opportunity.
Okay.
But then the most important thing is the skill.
Okay.
So if you haven't managed your own account successfully for at least a year,
yes,
and made consistent profits,
yes,
then there's a very high chance that you're going to fail that test,
okay,
and you're going to lose your money to the prop firm.
Okay.
So you should at first make sure that you have the skill. You're trading on your account for some significant period. You are highly confident of your trading strategy, and most importantly, risk management.
Okay.
If you take excessive risks, that doesn't work with a prop firm.
Okay.
So if you take manageable risk and do that consistently, then a prop firm could work for you.
Counter argument or devil's advocate in this scenario.
Yeah.
There are those who say, I don't like the money I'm getting from my account. Yeah.
Yes.
And I think we just touch on personal finance and trading.
Yeah.
And somebody says, let me pay this fee.
Yeah.
And trade on it, right?
Yes.
And that is because I think the money I have in my account is the hindrance to me getting some return on the capital I invest in. What do you have to say about that?
I think that's the carrot in front of the donkey. Okay. So if you have $100, $500, or $1,000 account,
yes,
I know that's not significant to earn you consistent income to have a good lifestyle.
Yes.
So
by good you mean flashy, I believe, not just a subtle, comfortable life.
No, something that would make you tell your parents that you are a forex trader.
Okay.
Yeah.
Yes.
So
I think the first time I told them I'm a trader is when you go back home with that bag of FX Pesa and then you have a notebook. Sometimes I do trade and they have decided today to give me some hamper. So you see, it's not that bad.
Yeah. So with the promise of, you can manage an account with $50,000, $100,000.
Yes.
Then you know that in that case, even if I make 5-10%, that's some good income that, I can say I'm a trader.
Okay.
So before you even get there, stop focusing on the carrot, focus on the skill.
Okay.
So if you can make 5% a month, on your $100 account, then the numbers don't matter. You just switch your lot size on a bigger account, and it will still work the same way.
Okay.
Yeah.
Interesting. I think
so. The skill is more important or importanter than having that big account. I can tell you for sure there are a lot of people in Kenya who have gotten these accounts. You pass the probe test and all that, and when you eventually land into that big account, then you eventually lose the money.
On the social media, go ahead.
If you have the skill, then well and good.
Yeah. I think what is clear about those who actually have, at least from interaction with them, they work with at least one or two accounts. They have their live accounts, which they are used for the daily expenditures. And then there is this account they are looking to invest their knowledge over years to make some big cash out to work with. So I think I personally agree as a skill over, or let's say, overstates anything else.
Yes.
Now, tied with that, there is that product within the financial markets. This would be the synthetic indices, and then I would like to intertwine it with the bots trading or robots trading.
Yes.
It has gained some prominence because you find yourself, perhaps you are a doctor, you are doing rounds, you are tired in the evening, you perhaps may not have a chance to check your charts every day.
Yes.
How would such a person, what would you say such a person, when he or she would like to automate perhaps his trading?
We both know, we live in Kenya, me and you.
Yeah.
So we have seen a lot of these guys in top leadership.
Yeah.
Whenever there are opportunities, whether it's be it tenders or jobs, they will basically, give those or connect that to their families and friends. But then when it comes to bots, you have a really successful bot, then here, this is where you have the shift in trend. Somebody is not giving that to their family or friends. they want you to buy it and put your money in there.
Yes.
So the fact is, like 90% or 99% of these bots don't make money consistently.
Okay.
So it's very rare to find a profitable bot. And if you find one, it will be either a little bit expensive or the owner is not selling it. They're just putting their money in there.
Okay.
So you have to be very cautious when you're dealing with bots.
Do you find it, I know in advanced economies like US, there is algo trading.
Yes.
Where picking stocks, picking indices and everything.
Yes.
I think it is more to do with your skill
Yes.
and understanding of software and development as opposed to just buying something, press play. And then if it was that easy, I mean, the markets would not be there.
Plus, of course, if you don't have any experience in trading, you're not a trader yourself, you wouldn't have any foundational basis to judge between two bots, which one is better. You wouldn't say this one is taking too much risk,
very good point.
This is doing that. So you'd have to be at least first be a trader, and then now you can think of a bot.
And perhaps you have experienced all circles in the economy, from recession, trading during recession, trading during the bull years, trading during the ranging years. Unfortunately, perhaps a pandemic. I think you have conditioned, and this is not per se to do with historical data, but I think there is an element of
different market conditions,
and how humans react to them, which cannot be found on the prices in the market. It can be found if you are during that time and you're able to see how they react, perhaps even tweaking it, hands-on trading. And so synthetics.
Synthetics, for instance, at FX Pesa we have the VIX index. So the VIX index is a regulated index, which basically measures the volatility of the S&P 500 index in the US. So it's regulated by and offered by the CBOE. But then when you see these other
CBOE in full,
CBOE is what do you call this market? I'm forgetting.
I think we'll tag it down. We'll tag it down. It's quick. Just go CBOE. I think Chicago Board.
The
options
Mercantile.
Yes.
So when it comes to synthetic indices, they are not regulated anywhere. There's no centralized regulator that is monitoring these synthetic indices. So if a company is offering a synthetic index, then you know that since it's not based on real market conditions, it can be heavily manipulated. So if you're trading some funny synthetic index, and let's say there is a pool of traders that are participating in it, if 80% of the traders are long on that synthetic index, that is, they have buy orders, then the person issuing liquidity in that synthetic index will see those orders. And they wouldn't want those traders to make money because it will come from his pocket. So in that case, most probably that index will be going down. And the 20% of the traders who are short will benefit, whereas the 80% will be on the losing side. So it's not tweaked like against you. Like between you and the synthetic issuer. It's between you and other traders. So if a majority of other traders are going long and you are short, then you are good. But
go ahead. Just finish.
But if you ever happen to find yourself in the same direction with other traders, then you'll probably be the losing one.
Now, compare that with FX. Sometimes you are trading and then all of a sudden at 3:30 p.m., you are selling gold, NFP drops, dollar weekends. It starts going up. Some would consider that sometimes as, a market manipulation, right?
So
what is the difference between, synthetics and FX, especially during high impact events?
So with real regulated markets, you can be able to identify an edge by basically studying either historical patterns or studying the market news and how people have been reacting to those news.
Okay.
So, for instance, just out of the ordinary, you know that since March last year,
Yes.
when the Fed started hiking interest rates, then we have had a longer term progression of the dollar against other currencies,
Yes.
and a longer term drop of US equities over the last 1 year.
Yes.
So just knowing that can give you a significant advantage in the markets.
Okay.
Whereas the synthetic index trader has nothing to look forward to in order to narrow down their
expected human
their
reaction.
probabilities.
Okay.
Yeah.
Okay. Interesting. And
you know, like there's no news that will happen that will say, now the index is going up. Nothing. Yeah. It's not based on real life.
I mean, now I know some people have made some significant amount of money.
Yes.
And I wouldn't want to knock their hustle and their source of income.
Yes.
But for new traders, perhaps I think it is best if you know what you're doing. I think you quite said it, know what you're trading and investing in before saying, this is something that I would want to do.
Sometimes there is this thing where we say, if you are looking to invest in an industry, then you look at the people who have succeeded in that.
Okay.
So I know old traders, people who have made money and retired of trading.
Yes.
But I don't know any synthetic index traders who have retired trading.
Okay.
Yes, it's a relatively new sector.
Yes.
But I would be, my bet would be much safer in an industry that is much more established.
Talking about safer, FX Pesa EGM Securities is regulated within the space by the Capital Markets Authority.
Yes.
Perhaps I know today is the Capital Markets by the open day.
Yes.
So there is a virtual event going on.
Yes.
As we record this, educating traders on various investment opportunities and avenues. What is the advantage of having a regulated broker, perhaps, as your broker of choice?
One of the advantages is that you have local presence. If you're trading with some funny broker operating in Cayman Islands, if you needed some support, if you needed to reach out to them, if you had a disagreement, you wouldn't travel to the Cayman Islands to get something about $1,000 resolved. You see? The other one is the broker is obligated to play according to the rules. If they breach the rules, then they lose their license.
Okay.
So in that case, the broker may not do anything that is contrary to what they're licensed to do.
Okay.
The other thing is in case you need any support from the broker, you can get that hands-on.
Okay.
So if you're operating with a broker that is not licensed or regulated, then it's a little bit more difficult to find that.
I think there was a case recently of issues with finances, especially. I think that is where everyone is always sensitive with money.
Yes.
For me, I think the best bet I get when I trade with a broker whom I know and I can see is two things: the ability of funds segregation.
Yes,
which makes
that's a very important point.
Makes it better for me, especially with all this banking crisis, because I know, I'm good with this. I can sustain and stomach the risks. Whatever happens in the economy in the future, at least I know.
So just to explain to the audience, when you deposit money to your broker, that money is not combined with the broker's accounts or with the broker's money. So it's kept in a segregated account that is consistently audited by the Capital Markets Authority of Kenya. So in that case, if anything was to happen to the company, your funds would be separate from the company's funds. So that makes it a much more secure environment to trade in.
I think we have covered pretty much some of the most thorny questions our traders had. Should any of the same arise based on what we have discussed previously or what you're experiencing as a trader, do not hesitate to either contact myself on Twitter, on Instagram, of course, FX Pesa on TikTok, and more importantly, on the comment section on YouTube.
Yes. And thank you, Malombe. Thank you, Shiro, for your questions, as well as Rosrin. We really appreciate these. And if any of the listeners has any questions arising from the podcast that you have done before or the one that is airing next week, feel free to respond to that via our socials, and we'll be happy to respond.
Thank you very much, guys. Have yourself a wonderful day ahead. Happy trading. Ciao.